Welcome back to another episode of the Market Noise podcast and YouTube channel. Thanks very much for joining us. My name's Paul Benson, and in the host chair tonight, we have Ethan back by popular demand. G'day, Ethan. John again.
Back at it. How's it going?
Back at it. Nice work. All right. Actually, just before we dive in, a couple of things. Firstly, I've got to apologise for my audio last week. I felt like an amateur. I realised afterwards that it didn't pick up through my good mic here. It was through my earbuds. So sorry that I sounded a bit rubbish last week, and if you persevered to the thank for that. And of course, I've got to get better at making mention that, as always, general information. It's certainly not advice, and don't be taking anything we say here to be some sort of investment advice that you should jump on. And I guess the final point, which I'm never, but you guys are probably familiar, which is that if you're watching this live on YouTube right at the moment and you want to have your say in the topics that we discuss, then please throw them in the comments straight away. And we'd love to have your contribution. All right, look into the first item, and this is a bit of an extension of what we spoke about last week. So for listeners that caught last week's episode about the fact that there's been a bit of a battle between the bond market and the Reserve Bank. Reserve Bank came out with this commitment back when things looked pretty grim when COVID came out, that interest rates were going down to previously unknown levels, and the Reserve Bank committed to keeping them there until 2024. Now, the bond market believes that they won't be able to stick with that because inflation is going to force them to move interest rates higher. And the week before last, the Reserve Bank kind of tried to call their bluff, and they bought $1 billion worth of bonds to try and give the bond market a bit of a lesson. And it worked for a day or two, but then the bond market fought back and continued to push interest rates up. And this week, essentially, the Reserve Bank gave up. They didn't come back and buy any more. Now, the Reserve Bank update is tomorrow. Melbourne Cup Day is when they update the markets. There's a lot of interest in, what they'll announce and whether they will acknowledge that, look, we're not going to be able to keep interest rates that low all the way through until 2024. Current indications from the market is interestingly a 0.75 hike by February 2022, which is pretty quick, really. It'll be interesting to see if that's really what unfolds. But certainly well and truly priced in something higher than the Reserve Bank's target, which is 0.6. The knock-on for that is, what does that do to prices? Because we all know that house prices are going berserk. And that's in part fueled by the fact that there's lots of money around and money's cheap. And so if rates creep up and potentially creep up reasonably quickly, will we see housing prices fall away? So it's been a really interesting story. I don't know, Ethan, I know house prices are not something that you follow, but have you seen anything on this during the week, and what did you make of it?
Well, they're not something I particularly follow, you're right, but as a young person eventually, wanting to get a house, it sort of is a bit hopeful that maybe they do fall away a bit, just given the current housing climate, from what I understand, being pretty damn expensive. But it is quite interesting that sort of the interplay between the two markets here, it seems like.
That's a good observation. I mean, what happens in the bond market definitely affects the property market. And we saw the Aussie share market on Friday, when this was really playing out, when it was clear the bank wasn't going to intervene a second time. Our share market dropped 1.4%, which was completely out of whack with what was happening in the rest of the world. So the interrelation there. The other one too is the Aussie dollar. So the Aussie dollar just over the last month went from about 2 US cents to 75. And that's in part an indication of investors thinking, well, if they have money in Australia, they're going to get a higher interest rate in the future. So it's pushing the Aussie dollar up. So great. There is a lot of interplay between these different markets. And I guess that's what I'm all about, really, is just thinking through, if you change one thing here, what happens over there. But anyway, certainly one to watch. Yeah, exactly right. Yeah. All right. What have you got, mate? Have you got what's your first topic?
Well, so the topic that I've got here, so Tesla, they've reached this recent deal with Hertz for the 100,000 cars. Very big deal lately. So after Hertz has sort of gone bankrupt, they've been, bailed out from bankruptcy. And with that cash, it seems like they've bought this entire fleet of Teslas, which has led to the Tesla valuation being over $1 trillion, $1.3 trillion as of lately. So yeah, it's quite a big milestone, you'd think. Have you heard much about it?
Well, firstly, well done for stepping into Justin's shoes there in his absence and continuing the Tesla theme, because he'd be very appreciative. We've had a strong
of course
in market noise, so the listeners would be well aware. But yeah, look, this is fantastic. What I immediately thought about is, imagine the salesman who got $100,000 sale. I wonder what sort of commission they got for that quarter. If you got $100,000 vehicles sold in a single transaction, I hope they got paid well. But yeah, pretty extraordinary.
What is it, like couple $100 million sale?
Yeah, I haven't done the numbers, but that makes sense. The other thing is, I just think it's a great idea because, like, I don't own this.
$4.2 billion sale it is.
Bloody hell. Yeah. So, gee, you'd imagine, I don't know. Yeah, you'd like to think there's a good commission there for somebody. But, yeah, just think about, like, as I say, I certainly don't own a Tesla, but if I was going on the holidays to the US or something and I want to hire a car and there was an option to hire a Tesla, totally I'd go for it. I'd love to give it a bit of in. So it's a great way for consumers to have a go at a Tesla, which I think a lot of people would like to have a go. Who wouldn't like to drag off the lights with a Tesla and see how fast it goes? And then potentially the next time you're looking to buy a car, gee, I had that fun with that Tesla on holidays. Maybe I'll buy one of those. So it's a great way for Tesla to kind of introduce their vehicles to new buyers. And from Hertz's point of view, if their competitors don't have all these Teslas, again, and you're being as a tourist, you go, well, I'll go Hertz because I want to have a spin with the Tesla. The other element,
you want to give the cool car a go.
Well, exactly, especially when it's affordable. You might not be able to buy it outright, but you can probably afford to rent it for a few days. And then the other element, which wasn't mine, a friend of mine threw out there, well, these hire companies turn over their vehicles pretty. So they buy 100,000 Teslas, presumably 2 or 3 years later, they're selling them on the market. So it's going to get a lot more Teslas out on the street, and secondhand, usually they're more affordable. So a lot more people can get into Teslas. So in terms of just the proportion of vehicles on the road, at least in the US, that are Teslas, it should have a pretty big impact. I mean, the United States is obviously a big country. I don't know, 100,000, maybe it's a drop in the bucket, but still a pretty big number, isn't it? It's
like
quite
a lot
incredible.
Of cars, isn't it? Yeah. Well, as well, I wanted to mention just a couple other statistics just on this $1 trillion milestone. So Tesla's worth now as much as 19 other automakers, including Toyota, GM, Honda, and Nissan combined. Its value is 15 times higher than Ford's, even though Ford brought in 115 plus billion more in revenue last year. So it's quite extraordinary that despite not necessarily outperforming all of those companies, still their valuation is a lot more. Which really sort of points towards it's sort of the way of the future. It's where people are sort of seeing the market going, I guess.
I mean, it's one way of looking at it is it's just trying to value the perceived enormous opportunity that is Tesla, which may well be certainly got some interesting things going on. The alternate is that Tesla's a bit of a cult, and that people just sort of buy it irrespective, and it's almost or perhaps and. There's just no rational way that you can justify that valuation. And as you say, it's extraordinary, worth 15 times more than Ford, and yet Ford sold 10 billion more. Like, it's ridiculous. How do you compute that?
But I guess at the same time, from an investor standpoint, who cares what the reason is? Like, if you're invested in them, perfect.
Well,
whatever.
Well, that's it. If you bought them for $1 a share and they're $1,000 a share now, you're very happy. And yeah, exactly. Who cares? Listen. No, all right, nice one. Cool. Let's keep things moving. Yeah, we've got plenty to cover tonight. This is probably the biggest one of the lot. So the big tech companies have also been the driver of the US market, but really the driver of global share markets, especially since the pandemic. But really, they were pretty strong before that. They've just really cemented their place. They all did updates, profit updates last week, and pretty impressive, really, across the board. We had Microsoft, the most impressive of all, absolutely booming, but expectations. What have we got? Actually, I don't have any numbers there, but the magnificent thing there is that Microsoft is now the world's largest company. They've overtaken Apple, not by a lot. It's pretty neck and neck, but they're marginally ahead of Apple, which has been the biggest company in the world for a long time. So quite a milestone there for Microsoft. Particularly, it's interesting. There used to be the FANG acronym, which is Facebook, Apple, Amazon, Netflix, Google. Now,
Right.
that was created, I don't know, a dozen years ago to reflect, well, here's the companies of the future. And Microsoft didn't even get included in that acronym, right? It was just Microsoft was yesterday's hero. It was a 1990s company. It was fading into oblivion. And now here we are where Microsoft is the biggest of them all. Extraordinary management effort and management turnaround. And a huge success story. And meanwhile, I mean, Netflix, obviously a viable business, but certainly nowhere near the scale of some of those other ones. So, yeah, look, Microsoft, stellar result. What else do we have? Alphabet there, Google's parent. Once again, good results. They're a bit disappointed with the YouTube result, but their cloud computing division had a fantastic outcome.
Which is interesting on the Microsoft front, because similarly, that's something that I believe they've got a bit of a focus on lately, is that cloud sort of computing stuff. So it's interesting that both of them have had sort of growth in that sector.
Yeah, well, Google's sort of third in that market. You've got AWS, Amazon that's big there, and Microsoft, they're heavyweights. And Google was a bit of a late starter, but they're pushing hard to try and catch up. So, yeah, that certainly kicked along for Google. Had Facebook report, and of course the big thing with Facebook is that they've changed their name to Meta. What did you think about that, Ethan?
Well, it seems pointless. I mean, we all know who you are. You're not hiding. When you're a company that big, name change, what's it going to do? We all know who you are. It's like, I don't know. It's like putting on, a see-through mask. Like, what's the difference?
Yeah.
It seems pretty pointless, but oh well.
They're trying to position for the future, and I suppose, like, it's like the way Google is, the parent company these days is called Alphabet. I mean, Facebook's got a few different brands. Obviously, they've got the Facebook product, but they've got the Instagram product, WhatsApp product. What else do they have? You'd probably be across it more than
Oculus, the virtual reality one. They own them.
Right.
What else they got? Yeah, I think they've just accumulated a lot of different sort of tech, ones getting into the market before they get too big to buy, sort of a thing.
Which seems to be what these companies do, doesn't it? So I suppose I can see the rationale of, rather than being named after one of your products, being named, have some sort of umbrella company and all your products underneath. And obviously the Meta is trying to position themselves for the future and how they see things playing out. But their results were a bit down, they weren't down. Their revenue climbed 35%, but it was slightly below what expected. And so the share price come off a little bit. And I'll show it once we've gone through them, just so you can see how each have moved. But anyway, a little bit disappointing. Apple results demolished Wall Street expectations. Every one of Apple's major product lines grew over 12% on an annual basis, which is pretty extraordinary. iPhone sales increased nearly 50% on an annual basis. Wouldn't you think everyone want an iPhone, surely they already own an iPhone, and yet they increased sales by 50%?
I guess it's all these people who are, buying their new one every year or whatever, I guess. Like, I don't know. I know both of us were sort of quite, well, we've got one that'll do us for 4 years, 5 years or something, but
that's it. I'm still on 7 at the moment, so and it's working. So, but 50% increase in iPhone sales, I find that extraordinary. So everybody with that. Amazon, a little disappointing. Shares dropped on their one. Report, a little bit weaker. Earnings were $6.12 versus expected $8.92. Revenue was 110. Market had expected 111. Not really in that. Decelerating sales growth as people return to physical stores. I mean, companies like that are going to have a challenge. They're comparing it to the same period last year, but the same period last year, everyone was in lockdown, right? So it really flattered them. And just the final one I picked up. Yeah, the final pick up, and they're not really in the same bracket, but they're an Aussie company, so I wanted to fly the flag. Is it Atlassian? Their share price really kicked along. Total revenue, 600 versus US, 614 million for the first quarter, up 34%. A pretty tidy result. And I'll just put up for the people that are watching the live stream. I charted the companies just over the last month, just so we could see how they're tracking. And if you're able to see it, depends how big your screen is. But the best performer there is Microsoft, not surprisingly. It's up 5% for the month. The worst performing there in the purple, that's Facebook. It's down 6% for the month. Everything else in between. So Google's second at 9.7%. And then the others are sort of 5, 6, 7%. But yeah, best performer of those sort of tech heavyweights been Microsoft of recent times. Worst performer has Facebook. So just, reasonably in line with those kind of updates that I just provided. But interesting to just see how that looks anyhow. Any other takes on those, Ethan? Because, they're just enormous, these companies, and have such a big influence on the world these days. It's hard to.
Yeah, well, yeah, not too much more. I don't know. It seems quite interesting that Facebook being down there. Do you know what's sort of prompted that?
And there's some talk that the changes that Apple made to improve privacy is hurting Facebook's ability to deliver ads that are as targeted as they once were. So my understanding is that's the main concern, their advertising just can't be quite as effective due to the changes that Apple had.
Interesting. Yeah, I'm someone who sort of uninstalls and reinstalls Facebook quite a bit. So I've sort of hit that, had to make that choice quite a couple of times. And yeah, it is quite, I don't know, it is quite easy to just go, oh, I'm all right, I don't want the targeted ads. Maybe it'll give me a few less or something. It's tough to know, but I guess that does make sense. Maybe advertisers less willing to pay or something, which ties in with the Google one, the YouTube poor performance as well, maybe.
Well, maybe. Interesting. Give me your, as someone who uses these services a bit more than I do. So interesting discussion around the fact that of the different serving up ads on these different platforms, that people tend to click on Instagram ads a bit more than most, and they're least likely to click on YouTube ads. That people almost invariably, as soon as the 4 or 5 seconds is up, they skip the YouTube ads. They're unlikely to click on those, most likely to click on Instagram and Facebook, somewhere in between. How does that align with your user experience?
Well, as a Gen Zer, I just use an ad block, so I don't get too many. But,
well played. Okay.
But whenever I do, I'd say the ones that tend to genuinely sort of grab me, they do tend to be the Facebook ones. I've had quite a couple where I've sort of gone, oh, that's an interesting product, or that sort of a thing. I'd say Facebook's generally the most captivating for me, at least.
Right. Have you clicked on many YouTubes?
No, I don't think I've ever intentionally clicked on a YouTube ad.
No,
in my life I would have. They always feel a lot less targeted to me. Yeah,
I don't have any good stats on it, but the amount of revenue that Google's able to generate through YouTube per amount of views is vastly lower than anything in the Facebook universe.
Yeah. Well, I find the YouTube ones are a lot more annoying as well, just because it's that voice and it's sort of monotonous, I feel. So hearing the same thing over and over. Remember, I always got one about trading the Forex markets or something.
eToro and all that sort of stuff.
Yeah, something like that. Those, some course or something. Yeah.
Okay. Yeah. All right. Good. Look, big tech. I think we've done that one. Let's move on. What
Absolutely.
have you got? Another interesting one there?
I do. So this is a little bit off brand, but still in the realm of money. So a pair of Michael Jordan's Nikes. It's always tough to know which way to say it.
Is it Nike or Nike? Yeah.
Yeah, which one is it? So they've been auctioned off for $1.96 million Australian. So that's they're his earliest known regular season game worn shoes, and sort of they were for his rookie season, just before he got the brand deal with Nike to create the Jordan line. So I assume that means they're quite rare. I'm not quite across the whole sneaker culture or whatever, but yeah, there you go. What do you reckon of a pair of shoes for $1 million?
Almost $2 million for a smelly old pair of runners, hey? And so he
you
hasn't
can
signed them
imagine
or
how much
anything
he
like
would.
that.
No, he played in them. So
And that's
you
it.
can imagine, yeah, a guy like that, you can imagine how bloody smelly they would be. He's putting in work in those.
Presumably he's going through them pretty regular too. You wouldn't even think they'd be all that scarce, but I don't know. Maybe they are. Yeah,
they've got to be pretty hardy, wouldn't you think?
Yeah, but
you
surely
played
as
a
the
fair amount of basketball.
But as a sponsor, you wouldn't.
Through?
Yeah, well, not many because I'm quite ass. But you wouldn't think if you were getting them for free, you'd. Well, as the sponsor is Nike, surely you would want your players going out in new-looking shoes each game. Like you wouldn't want them going out in scuffed pairs. I don't know. The players probably want to break them in a little bit, but interested. I just would have thought a bit like tennis shirts. The tennis players are going through about 3 of those. I would have thought you'd go through a pair of runners every week or something if you were sponsored by Nike. But anyway, who knows? But yeah, it's interesting, that whole collectible space, and I guess there's the NFT side to it, but collectibles generally has really boomed the last few years. I guess another sign of just a lot of money sloshing around. It fits in with the whole inflation story, and this is why interest rates are going up. And again, all those sort of interrelationships. But $2 million for an old pair of shoes, huh? That's pretty amazing.
Ridiculous.
Nice one. All right. Well, I got a little one here, which I thought was interesting. Let me just find it here. Yeah, it was looking at. So there's a fund manager, Generations, with quite a bit for our clients. Although unfortunately, it won't take any new money these days. They've been so successful, they've closed it. But it's backed by, or the founders were Al Gore, the former vice president from the US, and another guy called. His surname's Blood, because there's a bit of jokes around the fact that it was Blood and Gore. But they're a very successful fund, and their whole angle was very early on around sustainability. They were a bit ahead of the whole ESG thing, because this was started 15 years ago. Well, at least a decade ago, anyhow. And they've performed extraordinarily. One of the best funds that we've had for clients. Been really, really good. And anyway, the chief there, Mr. Blood, has come out just last week and sort of suggested that maybe ESG is no longer and a quote here: ultimately, we imagine that climate-led investing is an asset class that will be, at a minimum, a priority for all the institutions who have made net zero commitments, Mr. Blood said. Very difficult to make a Paris-aligned zero commitment and then continue to allocate capital in the way that we are currently doing it. So it's just interesting because ESG... Sorry?
It's a great quote by him. I quite like that one. Yeah.
It's just interesting because ESG has really hit the mainstream in the last 12 or 18 months, and everyone's doing it. And so it's interesting that a player who was into this, as I say, a decade or more ago, is now suggesting that, well, okay, that ESG filter and that sort of approach, actually, it's no longer enough. It's not doing enough to have the impact. The people investing, the reason they're following these strategies is in the hope that it has a positive impact and pushes the planet in the right direction. And he's sort of suggesting that, well, actually, those ESG approaches, they were a good starting point. We started there 10 or 15 years ago, but these days that's not enough. And actually, we need to do quite a bit more. And, it's interesting. He's coming to that at a point where ESG is sort of getting broad adoption. Anyway, look, that one just caught my eye, and I thought I'd throw it in there. what else did I have? I don't know if I had more. Oh, I did have one more. Yeah, of course, a big one. For people that listened last week, we spoke about the fact that over in the US, there was at long last a Bitcoin ETF, which is something that people have been screaming for ages. Pretty imperfect because it's on the futures market. It's not actually the spot price, and it was pretty expensive too. But nevertheless, it was a start. And since then, I think 2 or 3 others have launched as well, competitor products. But in a surprise announcement, really, on Friday, ASIC here in Australia, corporate regulator, essentially gave the thumbs up for crypto ETFs here in Australia. They gave a sort of a format of what they would expect that type of thing to have. I'm just trying to find it here now. Yeah, so they want to limit the inclusion to those with a robust and transparent pricing mechanism, a large number of institutional backers, and crucially, a relevant futures market for trading linked derivatives. So that's as best I can understand, and it'll be interesting to see when the products arrive. It doesn't necessarily have to be a futures type product the way they've done it in the US, but there has to be a futures market in existence. Seems to be what ASIC is saying. So that means that in practice, only, at least for the moment, going to be Bitcoin and Ether would be the only ones that would fit that description.
Yeah.
Other interesting things, though. Now they've got to have to appoint a custodian with specific crypto expertise and at least $10 million in net tangible assets. So you're going to have a bit of cash there. And then this is the bit I thought was really interesting. They should be able to compensate investors for any custodial assets lost and clearly disclose the risks of investing in crypto assets, including risk of cybercrime, market losses, and even environmental impacts associated with mining and maintaining some crypto coins. I mean, all that, environmental, all that's interesting, but it was the first bit about they need to be able to compensate investors for any custodial assets lost. So in other words, because that's always the worry, the whole Mt. Gox and this sort of stuff, how do you know that it's not all a scam and that your coins are going to get stolen? What they're saying here is if you issue an ETF on the Australian market, you need to be able to back that up. And if there's a theft or something dodgy happens in the background, you need to compensate investors. So from the investor's perspective, that's a massive reason why if you want to get into crypto, you would do it through these ETFs because effectively you have a guarantee. I mean, the price is still going to go up and down, but there's never going to be a situation where just all these things are stolen by some, Ukrainian mafia or something, right? Which you don't have in any other instance where you buy crypto. I thought this was quite incredible, and it'll be interesting to see how long it takes market participants here in Australia to get a product out. Thoughts, Ethan?
Well, yeah, I think it's quite incredible, just the restrictions, as you say, on them. Particularly, the one that caught my eye was the fund manager person having $10 million in assets, or how was it phrased exactly? Something along those lines.
The custodian, they've got to have at least 10 million in net tangible assets.
Yeah, that seems quite a tall order for I mean, any individual to have necessarily.
Although that US Bitcoin ETF, it accumulated $1 billion in funds under management in one day. Now, so that's the US.
Okay, I think I've misinterpreted this. I think, okay. See, what I thought you were saying was that, like, the people who are managing this ETF need to, like, themselves have that amount of exposure.
Well, sort of, either or they're using an external custodian who would have $10 million in the bank or more. So what they're saying is the person that's actually holding the assets on behalf of the people that buy the ETFs, they can't be little tin pot company fly by night. They have to have some decent dollars behind them so that if something goes pear-shaped, they've got a pool of money there that they can dip into and make things right. So that's where they're coming from. And $10 million to you and me as an individual sounds like a lot of money, but in financial markets, it's not really that much money. So
for a company, it's a drop in the bucket, isn't it?
Well, in this sort of space, anyway. Yeah. But super interesting. I'm sure we'll have updates on this one in Market Noise in future weeks. But crypto ETFs in Australia, it's totally possible that they're a matter of weeks away. Totally possible. I mean, there are companies that have been trying to get these listed for about 2 years. They've got all their paperwork ready to rock. They just needed the regulator to say, here's the way we want you to do it, and we're prepared to listen. And ASIC's come out and given them the guidelines of what they need. So super
I think some
interesting.
have been working on it since like 2013, haven't they? They've been working on it for quite a while, I believe.
I don't know if that's in Australia, possibly, but yes, internationally they would have. So it's just, there's huge. I just had an email from a client today. How could I get some crypto in my super fund? And really, there was no, he doesn't have a self-managed fund. So the only way, we really just need to wait for these ETFs. I think they'll be really popular when they come through, which actually, I mean, that's the final item I had to discuss, Ethan, but I know you had one more to throw in, and that probably ties in quite well with what we're just talking about. Do you want to hit us with your last one?
Well, it does. So it's quite a exciting. So we've got to probably preface this by saying that they haven't actually done this trade, but it would be a insane, greatest trade of history sort of a thing. So a wallet with $8,000 invested in Shiba last year is now worth $5.7 billion. So can you imagine, like, just being that guy that's done that? Freaking absurd numbers. And just for sort of a statistics look at it, I did the calculation before. I could be wrong here. My math might be a bit faulty, but
there's a lot of zeros when you get to 5.7 billion, isn't there?
Yeah, 712,500% up is the number I've come up with
in less than a year.
In less than a year.
And when you say the trade hasn't been done, it hasn't been done insofar as they haven't sold yet. But the trade has been done in that they've bought $8,000 of these Shiba coins. So the first half is done. The question is just when they exit.
Yeah. Yeah, it could be if it goes up anymore, geez, who knows?
You know what I wonder, right? It makes no sense to me. If you're the person that bought these $8,000 of Shiba, it goes up and they're worth 100,000. Be tempted to sell, but who knows? Maybe you got a whole bunch of crypto, so you don't bother. But it goes up to 1 million. Wouldn't you sell? It goes up to 10 million. It goes up to 100 million. How on earth do you not sell? But then you hang on. Yeah. It goes to $1 billion. $1 billion. You put $8,000 in, it's worth $1 billion, and you go, no, I'm still not selling. And even at 5.7 billion, what are you doing? Oh, no, I really need 10. I mean, how am I going to get by if I don't have it? Like, it makes no sense to me that anyone would hold on to this until 5.7, which makes me wonder, could someone have they lost it? Have they forgotten their password? Have they? Correct. Have they got it on a USB and they dropped it, fell out of their pocket back of a taxi? Because I don't get how anyone could possibly maintain their sanity with an investment and run it all the way to 5.7 billion. And I don't understand why you would want to. Like,
you'd have to have such a stomach for risk to do that on purpose, wouldn't you?
And but also, how's your line to be any better?
Permanently.
Yeah. But I mean, if that got to 100 million, I don't even 100 million versus $1 billion. Your life's no different, is it? Like, I don't understand.
Yeah. Well, it's mentally difference between $1 billion and $1 million, though. Like $1 billion, that's 1,000 millions. That's an absurd amount of money. So 5.7, 57. What's that? Yeah, 5,700 millions. It's a lot of millions.
It's bizarre, isn't it? And so how someone hangs onto a trade like that, but it'd be so interesting to see when they exit. The great thing, as per for those watching live, we've got on the screen, like, it's the beauty of blockchain is it's evidenced. There's no question this trade occurred. Someone bought this. I mean, they trade back into ether rather than dollars. So I guess to some extent, it's by the fact that the ether price has gone up too. But it's mainly the fact that the Shiba Inu, I don't know heaps about it. Justin talked about it a couple of weeks ago, but I know it's been going absolutely ballistic. But nice pick up there, Ethan. That's if you manage to exit at something like this, it would be hard to believe that there's ever been a trade in history more profitable than that. I mean,
No. You couldn't imagine any company just, I don't know, like that sort of growth. Surely for a share or something, that's got to be, 50
It,
plus years growth or something.
it would just be impossible, wouldn't it? $8,000 to 5.7 billion. Wow. It's extraordinary.
It's incredible.
All right, mate. Look, I think we better wrap this one up. That's been a good discussion. Thank you, Ethan, once again jumping on. Thank you for everybody listening on the podcast. And of course, if you've jumped on and watched us live, thank you there as well. We'll be back next Monday, of course, 8 p.m. If you want to catch it live, or you can obviously listen on the podcast, which we know is the way most people catch us. Financial Autonomy is where you find the podcast. Thanks for jumping on, and we'll see you all next week. See you guys.
See you.